Welcome to Alpha Talks, Seeking Alpha's Editors Roundtable. What moved markets this week? The week ending Friday, March 26, 2021. A week where markets kind of struggled to get any kind of real direction, or for that matter, to kind of develop any kind of narrative. It's kind of a weird, quiet time on Wall Street. We had the Fed testimony last week. Fed release, I should say, announcement, and we had testimony this week and several other appearances by Powell that moved things a little bit, but not all that decisively. We had trouble in the Suez, to steal a line from Billy Joel's song, but that appears to have been quickly forgotten as well. There was virus on, virus off. That maybe is the one most dominant narrative that has emerged when early in the week we had news of lockdowns in Germany and France, and that weighed on risk assets, and investors actually bought bonds again. 10-year yield dropping down to the lower 1.6 range, pretty significant drop from last week. Add it all up, and we are looking at gains for the big indexes, the SPY, the S&P, and the Dow. Nasdaq is down about 1.5% for the week, and the Russell has taken most of the punishment here and is down about 4% week over week as I record this. We record this on Friday at noon. Ultimately, though, for the S&P, the 50-day moving average, for all you technicians, appears to have been the level of support. I don't think the S&P has dropped below that. That's my story, and I'm sticking to it. But my colleagues may have a different take, and with that, let me introduce them now. I am joined by, in no particular order, Brad Olison, VP of News, Kim Kahn, Senior News Editor, Stephen Alfer, Managing Editor of Breaking News. I am your host and moderator, Nathaniel E. Baker, Senior Editor of Strategic Contributors. Okay, let's get it started with Kim to give us the big picture view of what moved markets this week.
Yeah, it's been a lot of toing and froing in the markets. Really, I think you mentioned Germany's lockdown. That was a lockdown for about 24 hours, and then there was a sudden about face from Angela Merkel, and they lifted that Easter period lockdown. That's kind of indicative of how the markets have been. As soon as one kind of trade gets going, suddenly it kind of just stalls and something else takes over. As you said, we saw bond yields slide through the week, and then they popped up this morning that are easing back down again. So still no direction there. Which was surprising was that as bond yields kept sliding, the Nasdaq didn't really catch a bid. It's down still for the week, and that was going to be the narrative that everybody was looking for. As soon as yields called off, then the Nasdaq could be off to the races again. One explanation for that is mainly that it's a bit of end of quarter portfolio rebalancing that we're seeing. So that goes money going into bonds and out of stock. So yeah, we see yields come down, but we also don't see a corresponding rise with money's also coming out of more of the riskier areas of the stock market. And you also mentioned small caps, which I think are it could be a big tell for whether the market is ready to move to its next cycle. The Russell did drop below its 50-day moving average for the first time since October. That snapped the longest streak it had had above that level since 2011. And it really looked like small caps were breaking down. But again, then we got a kind of head fake, and now they were up sharply yesterday. They're up again today. So we'll see if they can hold on.
Yeah, I'm curious about the winners and losers here. You mentioned small caps, tech stocks not doing well. Some of the virus names got bounced around a little bit, and the reopening trade as well. But Brad, take us away. Let us know about who the winners and losers were this week.
So obviously a boatload of news this week, and pun intended. Part of that helped drive some of the action, but again, it was like to Kim's point, a lot of to and fro. So the Suez Canal blockage definitely helped some of the energy names and some of these tankers. It's expected that the freight rates should soar as a result of this particular blockage, but they were already encountering a really rough environment for freight rates heading into this week. And so the shares of Frontline Tankers and DHT Holdings, although they are soaring in the latter half of the week, they were a little bit weaker on the front half, so they didn't in the aggregate move all that much. And the same was true with crude. Crude was about to come off. It had soared for the last few weeks, and it was coming off at the front half of the week before this latest Suez Canal blockage. So not a lot as far as the full week's performance is concerned there, but they're definitely on the latter half getting a boost. But otherwise, as far as the winners and losers for the week, a lot of safety trades. You saw some, like you mentioned, some of the pandemic trades came back. Costco, I think Clorox, you saw some of these other bulk retailers, Target, and even some of the dollar stores benefited this week. Partially, they got some bullish analyst commentary from Bank of America, JP Morgan, as well as some utilities also benefiting, which are typically more safety-oriented trade. Losers, we saw some in the media. The last couple of weeks have talked about how Discovery and Viacom have seem to be having double-digit weeks every single week. That's come off considerably this week. I think they're having almost 20% down day as of the taping this Friday. Viacom is selling some shares, I believe, at the early half of the week, which kind of leading to some of this downdraft. And Fox is also a bit weaker on the back of this continuation of the fallout from the voting scandal, the voting system allegations. So there's definitely some weakness there, along with some of the brick and mortar names in retail. So we saw the bulk retailers are doing well, but some of the brick and mortar retail like Gap and Express are seeing a little weakness, partially maybe due to some of the indications from Nike and the tail end of last week. Their earnings are showing some supply shortages and difficulty in sell-through. And some analysts do believe that the e-commerce spending numbers for some of the brick and mortar retail may not come back as strongly as some may have hoped.
Yeah, I believe Nike also has a PR issue on their hands. I think we're going to talk about that maybe a little later. Stephen, what were you watching this week?
Well, I haven't talked about cryptocurrencies in a couple of weeks, so let's get back to that. But the big news is Tesla is going to accept Bitcoin in exchange for its cars. And again, that's not really the big news. Anybody can do that. Plenty of companies do that. It's actually a little bit gimmicky, if you ask me. But what the big news is that Tesla is not going to be taking those Bitcoin and converting them into dollars. They're going to hold on to the Bitcoin. So they're going to be using this as a way to build their Bitcoin reserves and diversify a little bit away from greenbacks or whatever other currencies they hold. Yeah, it's really big news. I think a guy at Wedbush called it a seminal moment for Bitcoin. There was some other, Fidelity is now getting into the Bitcoin ETF game. So there's, I don't know, eight to 10 US players looking to do a Bitcoin ETF. So I would think surely we're going to get multiple US Bitcoin ETFs sometime in the next year. New York DIG, New York Digital Investment Group, their CEO was on a podcast saying sovereign wealth funds are inquiring about buying Bitcoin. So a lot of bullish news. Again, I'm not really talking about prices here, just more about the platform, the Bitcoin platform here. The price is actually, the price is actually down for the week. If you ever have read old commodity traders, they say when something sees a lot of good news, but the price doesn't respond positively, they get the heck out. Again, a lot of bullish news, but the price action says differently.
And one corporate development that I think we may have skipped over was GameStop. So it was both a winner and a loser this week. So I would be, I'm remiss not to mention that as part of my segment. But the earnings kind of, it was growth year over year, I believe, but ultimately it was a miss in the eyes of Wall Street. But that didn't stop, shares cratered, but that didn't stop them from soaring shortly thereafter. So that story is still alive and well.
Yeah, and they had some back and forth on new share issuance, right?
That too.
It also moved things a little bit. Okay, so let's move on to the next segment of the show where we discuss our favorite stories, Seeking Alpha articles, news coverage, or other items that caught our interest. Why don't we start with Brad?
All right, changing it up a little bit this week.
Yeah,
all right. Well, all right. Now I got to be quick on the draw. So I think the story that was interesting to me was and it kind of touches on a lot of different topics that we've already discussed this week, is some of the Chinese tech crackdown. So late last week and earlier in the weekend, we saw that China said that they don't want any of their military personnel to be running around in any Teslas. They were fearing that the Tesla cars would be spying on the personnel and sending data back. That was just the first nugget of Chinese worry this week. And then shortly thereafter, there are news stories circulating that the Chinese are going to crack down on some of these data collection practices from e-commerce companies that sent shares of Tencent Music, I believe, and Iqiyi and Alibaba down. I think Tencent Music TME was down something like 20% on that news.
Anyway, Stephen, what about you?
A story that our energy editor, Carl Saran, did yesterday on Warren Buffett, again, showing why he's Warren Buffett and we're not. They're proposing about an $8.3 billion deal with Texas to build a bunch of natural gas plants, energy plants to hopefully, so what happened this year will not happen again. And part of it would add to customers' electricity bills, and Berkshire would be guaranteed a 9.3% rate of return for basically just building these plants and keeping them idle, except in the event when it's needed. So a 9.3% guaranteed return in a world of 1.5% 10-year yield. And Berkshire is probably able to borrow you for even less than that. Is a pretty nice deal.
All right. Kim, what about you?
Going back to the China story, another aspect of it with Nike, and their shares are down about 4% of the week, although they're popping up a little bit today, and a boycott in China because of the sanctions, the Western sanctions hitting Chinese officials over the Xinjiang province, and so Chinese social media is out. They're trying to boycott Nike. A bunch of celebrities in China who try to really stay apolitical are now cutting ties with the brand. It's obviously dented shares a little bit. What's interesting to me is like how the kind of the social media aspect in China is kind of unified. I want to see the reaction in U.S. social media, just because actually it seems like this would be one of the few places that maybe Twitter was united in, because of both the left and the right have their problems with China, and so that might be coming out as a support for Nike. And also an interesting aspect was that I saw a huge bounce in Chinese cotton producers and apparel and textile makers in the stocks. So the Chinese retail investor seems to be like flocking to those names, and either, I don't know if it's for patriotic support or that they think that the sell-off would be overdone, as some analysts said. But it'd be interesting to see if the Wall Street bets crowd gets in a kind of patriotic move and goes for Nike options.
Yeah, the Chinese stock market in many ways is like the original Wall Street bets. I mean, it's very retail driven, and some of the things that drive movement on those stocks don't have any basis in fundamentals. So yeah, it's interesting. And for me, my piece that I wanted to talk about this week was an article by Hoya Capital Real Estate here on office REITs, called Office REITs, the New Normal. And this is a question that many REIT investors, and indeed many investors throughout the world, are asking themselves, which is, what is going to happen with commercial real estate, specifically office buildings, as this pandemic unwinds and things return to normal? And they go into this discussion quite a bit, and they actually rank the various office REITs, which is pretty interesting. But ultimately, they say that dense coastal office markets with brutal transit-heavy commutes will struggle in the new normal. I think that people who live in or near New York, Washington, D.C., Philadelphia, Boston, and some other places know a little bit about brutal transit-heavy commutes. And then they also say we see value in Sunbelt and suburban-focused office REITs, which are poised for a faster and more sustainable recovery. So I thought that was interesting. I also heard the term thrown around here earlier, the re-suburbanization of America, and the whole trade that goes into that. And that may have been also helping out Walmart and Target shares a little bit this week.
How does that factor into the WeWork SPAC from this morning?
Good question. Good question.
Office exposure there.
Yeah, good question. Yeah, who knows? They may have trimmed some of their office exposure to the extent that they were able to. I don't know. I haven't looked at that very closely.
They lost $3 billion last year.
Yeah.
Valuation down to 9 from 50 2 years ago.
Meanwhile, Adam Neumann is somewhere on the beach, probably.
Yeah.
Counting his money. All right, that concludes the Alpha Talks Editors Roundtable session for this week. Thank you all for watching and listening. Remember that if you are watching, this may not have been a complete recording. For size issues, I keep the video file a little smaller. So you can check out the audio recording through the Wall Street Breakfast podcast account, available on all podcast software, anywhere you get your podcasts. If you're listening and want to view the video, you should do so by visiting the website seekingalpha.com/videos. And that airs every Friday afternoon around 4 p.m. Oh, finally, before I forget, next week is a Good Friday holiday, a short week. We will record this on Thursday instead. So you look for this next Thursday at 4 p.m. And with that, we thank you for watching or listening, as the case may be, and look forward to speaking to you again next week.